Okay, let's dive right into this. Today, we are conducting a totally exhaustive, purely data-driven research briefing on Frontken Corporation BHD. They trade on the main market under the stock code 0128. Now, if you are looking for a highly detailed professional evaluation of one of the absolute most critical players in the global semiconductor supply chain, you are in exactly the right place. We're going to completely unpack the hard numbers, the technical price action, and the fundamental financial health of this company.
Here's our roadmap for this explainer. We're starting with the introduction and company background, then moving through the investment instrument profile, price behavior and technicals, performance and asset valuation, the overall market assessment, and wrapping up with our final investment conclusion.
Section 1. Introduction and company background.
Before we even look at the technicals, it is vital to note that Frontken is a Sharia-compliant equity. They've been fully cleared by the Sharia Advisory Council, meaning they meet strictly regulated standards for both their business activities and their financial structure. So who are they exactly? Well, founded back in 1996, this isn't just some generic tech company. They're a highly specialized service provider focused on precision cleaning and surface treatments for premium engineering parts, mostly in the semiconductor space. Their core business is literally extending the lifespan and improving the performance of semiconductor components in manufacturing environments where they require absolute zero contamination. While they have operations running in Malaysia, Singapore, and the Philippines, Taiwan is their major hub. That's the primary revenue driver. And because of this, they are perfectly positioned to ride the massive global tailwinds we're seeing in AI, cloud computing, and digitization.
Now, what's really interesting here are the FY 2025 highlights straight from management. We're looking at revenue hitting a very impressive RM 607.8 million, which is a solid 7% increase. Net profit attributable to shareholders expanded by 13% to reach RM 154.2 million. That pushes their profit margins up to a hefty 25%. But the real standout metric, it's their balance sheet liquidity. Even after pouring RM $42.7 million into capital expenditures for capacity expansion, Frontken is just sitting on a pristine net cash balance of RM $833 million. I mean, that is some extraordinary financial flexibility right there.
Section 2. Investment Instrument Profile.
Let's talk about what you're actually holding. Investing in Frontken means buying ordinary shares that give you equity ownership. The main mechanics for investor returns here are going to be capital appreciation driven by their business expansion, supplemented by a steady dividend payout, which, by the way, they maintained at 2.0 cents per share for 2025. But we have to ruthlessly contrast this potential for capital gains against the risks you're absorbing as an investor. This equity is incredibly sensitive to the cyclical demand of the global semiconductor market, totally exposed to foreign exchange fluctuations, and obviously vulnerable to broader global economic uncertainties. You're buying high growth for sure, but make no mistake, you are also buying direct exposure to the global macro tech cycle.
Section 3. Price behavior and technicals.
Switching gears to a strict 50-day technical analysis between April 1st and June 15th, 2026, we are looking at a textbook bullish progression. Notice that tight consolidation in early April. The price compressed into a really narrow range between RM $3.80 and RM $4.02. This is classic accumulation, right? Smart money was quietly building positions. Then, by mid-April, we get this decisive high-momentum breakout above that key RM $4.00 psychological resistance level, kicking off a sustained upward rally.
If we expand our technical view, the broader structure of this rally is super clear. Look at the formation of consistent higher highs and higher lows running straight through May and June. Yes, there were brief, short-term corrections in early June, but they were almost instantly met with renewed buying interest. This specific pattern is the ultimate indicator of strong market confidence. Investors are aggressively pricing in Frontken's dominant positioning within that semiconductor supply chain.
Let's break down the exact technical metrics of this 50-day period. The stock opened at RM 380, hit an absolute high of RM 499, saw a low of RM 373, and averaged right around RM 448. But the absolutely crucial takeaway is that it closed at RM 497, delivering a massive 30.79% return in just over 2 months. We've mapped a foundational support 1 zone between RM 370 and RM 380, and then a higher, secondary support 2 zone established right at RM 460 to RM 470 after the breakout. Resistance is currently capped at that RM 500 to RM 510 range. The volatility profile is also highly attractive for a growth stock. We've got an average daily return of 0.57% against a very moderate standard deviation of just 1.85%. It's controlled, consistent upward momentum.
And this raw daily trading data brilliantly illustrates that momentum mathematically. Leading up to mid-June, you can trace the daily opens, highs, lows, and closes, alongside the trading volume, literally pushing the price right up against that RM 5.0 resistance ceiling. This isn't just market sentiment. This is rigorous mathematical proof of that 30.79% capital appreciation over our observation period.
Section 4. Performance and asset valuation.
Now, we need to meticulously unpack these financial ratios, because a surface-level read of this data could be completely misleading. Notice that return on equity dropped from 18.99% down to 14.89%. Similarly, the dividend yield slid from 0.53% to 0.40%. You might be wondering, is this a sign of weakness? Absolutely not. Actually, this is a direct mathematical result of massive, aggressive growth. Net profits increased, pushing earnings per share from $8.70 all the way up to $9.65. So, why did ROE drop? Simply because the denominator, their shareholder equity, ballooned as they retained their earnings. The dividend yield dropped because the share price skyrocketed, while that 2.0-cent payout stayed constant. Meanwhile, the PE ratio expanded significantly from 39.38 to 49.22 times.
To understand exactly where that PE expansion is coming from, we look at the statement of profit or loss. Total profit after tax attributable to owners grew from RM 136.8 million to RM 154.2 million. The broader market is fully aware of this earning power. When the PE ratio reaches 49.22, and it actually peaked at nearly 52 times during this period, that's the market assigning a strategic premium to the stock. Investors are willingly paying a higher multiple for Frontken today because they are pricing in exponential AI-driven earnings growth in the immediate future.
Moving over to the balance sheet, the snapshot of the company's assets really demonstrates the tangible scale of their expanding operations. Total assets reached a staggering RM $1.30 billion, which is a massive jump up from RM $988 million the previous year. You can also see incredibly robust liquidity in their current assets, particularly those massive cash and short-term investment reserves. This gives them an absolute fortress of a balance sheet, allowing them to fund further capacity expansion without putting any stress on their day-to-day operations.
Let's look at how this builds into their capital structure under equity and liabilities. This is, hands down, perhaps the most impressive metric in the entire report. Look at their bank borrowings. It is practically zero. This results in a breathtakingly low debt-to-equity ratio of 0.00001. They are relying almost entirely on their RM $1.04 billion in shareholder equity to finance their activities. By utilizing literally zero external leverage, Frontken has effectively eliminated interest rate risk from their operational profile. That is a huge deal.
Section 5. Overall Market Assessment. Synthesizing the microfinancial data with broader macroeconomic forces, the setup for Frontken is essentially a perfect storm right now. The entire semiconductor sector is experiencing a massive uplift, entirely driven by the insatiable demand for artificial intelligence, data centers, and advanced cloud computing. And this tech boom is happening against a backdrop of generally positive global GDP growth and stable interest rates, which directly encourages heavy capital expenditure from Frontken's clients. Because AI chips require virtually flawless, contamination-free manufacturing environments, the demand for Frontken's highly specialized precision engineering and cleaning services is effectively locked in for the foreseeable future.
Section 6. Final investment conclusion. So what does this all mean? The core thesis is this. Frontken is a premier, Sharia-compliant growth asset. Technically, it is fiercely bullish, generating a nearly 31% return in just 50 days. Fundamentally, it is pristine, generating a 14.89% ROE utilizing practically zero debt. That high PE ratio? It's not a warning sign. It's a strategic premium totally justified by the sector's growth dynamics. And crucially, that low dividend yield of 0.40% is a feature, not a bug. Frontken is a pure-play growth equity that aggressively reinvests its earnings back into business development to compound your capital gains rather than just handing cash back to shareholders.
As the research report concludes, quote, combined with the bullish share price trend and positive outlook for the semiconductor industry, Frontken appears to be an attractive Sharia-compliant equity investment for investors seeking long-term capital appreciation. They have built a total financial fortress right in the middle of the global AI supply chain. So the really provocative question moving forward isn't whether they will grow, but rather, How long can Frontken possibly maintain this ultra-conservative, zero-debt capital structure while fulfilling such an aggressive high-growth trajectory? Thank you for joining me for this comprehensive explainer.